Hello and welcome to the second and final part of the Silver Log. It is roughly almost 12 o'clock Eastern. Any other updates today will be on the blog. Most likely near the end of the market close around 5 o'clock Eastern time. And then another quick one on the PM session. The market has broke below this significant support line. The Fibonacci lines are changing. Maybe it's got a little bit more lower so that this line can match up with this resistance, thus making this line go lower. Again, I don't know, but I want to focus a lot towards the manipulation, towards the market. We'll start off with Bank of America. Well, what's the volume for Bank of America? Going back to 1984, when the market was going through its crisis period, it was trading in a monthly period over 10 billion shares per month and down significantly. A lot of people saying this low volume rally on stocks is weak, and maybe they're right. When we look at this on a logarithmic point of view, each line represents a difference of 10 times greater, 900%. Therefore, from this bottom period here, it's went up 10 times, 100 times, 1,000 times, roughly around 4,000 times. Now, maybe the population went up 4,000 times more from 84 to here, but no, it didn't go up that much. This is ludicrous, in my opinion, to see how the volume is increasing this much. For silver, well, same thing, linear chart. It went up quite a little bit and back lower. And we look at this on a logarithmic scale going back to 2007. This represents 2 days. It goes up 10 times, only about 100 or so times, but that's a lot. And when people talk about situations in a day where there is so many 50, 60, 80, 100, 200 million shares of silver traded, remember the same share can get traded hundreds of times over in a day, especially with high frequency trading, which is automated computer wagering for that matter. Maybe at 12:15 the market goes long, or the computer puts long entries in for so many shares at say 34.50, and then 7 minutes later they sell it at 34.54. Then they short it down to 34.46, and then they can sell and go back and forth like 50, 60, 100,000 times per day. Another reason why, of course, the volume in so many of these markets is just escalating. It's so much easier within these digital markets, so many more day traders, and so on and so on. This is the 1 minute chart on the SLV, and this spike in volume occurred last night at 3:38 p.m. Originally, there was this move in here that at the time looked like some pretty significant volume, and obviously very, very, very high volume. Every minute we've already now had one, two, three, four, five. Oh, we've had about 10, 12, 13 over a half of a million or 100 over a 500,000. And then the one yesterday that was 2.5 million in just 1 minute alone. And question is, who are the ones that are making these trades? Is it real investors, people looking to get into silver, and how much of it is done by the financial powers that be? So when people state, especially the bears or anyone looking down upon silver bugs in any way, you know what, when the market goes down, you're going to complain about manipulation. Well, you know what? You should complain about manipulation, not only when it goes down, but when it goes up or when it goes sideways or any time that it's happening. To take advantage of it because of price controls, you can buy this stuff at dirt cheap. And I say price controls because they are telling you how much the silver is worth. Yes, they may go a little higher. They say the spot price is 37. Yeah, we'll go 41 or 42 for the Maples and Eagles or whatever, but it's still working within a price control. Because for an effective way, in my opinion, for silver or any commodity for that matter to be traded, is if you're a buyer, you have one of two choices. One, you can take the price that is already bid, the best one out there. Say, for example, the best one out there is 36. We'll just put that number in, 36. So these are prices that you can buy it at. These are what people have put in for offers. So you can either buy it at 36, and maybe you can put in, well, if anyone wants to sell at 35, then I'll buy here. That's putting a limit order in yourself. So when you're buying, that means you would either put the order in here. When someone executes, you get the sale, or you take what somebody has for sale, and then you either have it in the inventory, which is how it would start off, or you ask for delivery. If you want to sell, that means you either have that in your inventory, or you are willing to send it to the inventory. That means if you see somebody's willing to buy at 35, then you can make your sell order here, or you can put a number in yourself. You have two options as far as all of this fractional reserve, margins, shorting what doesn't exist. I'm not a fan of that. In a free market, this is similar to how I think it should work. Anyway, take care, and again, the updates will be on the blog probably around 5 to 6 o'clock Eastern, and have yourself a good day.